Hi guys. What is Forex and what are the most basic concepts around Forex? Hi, this is Gashara Gashehe, your day trader stroke swing trader, and I'm here to teach you about what is Forex and what's the most basic concept around Forex. So most people have been asking me, hey, how do you trade Forex and how do you navigate around Forex? And they really see Forex as a hard thing, but okay, fine. If you've spent some time in the market, it's actually not so hard. So what are the greens, what are the reds, what are you looking at? What's this thing that is right here? So I'll be explaining it to you in the easiest way possible. So pay attention, hit the like button, hit the subscribe button to this channel. We'll be actually be getting so many videos that I'll be explaining Forex in the simplest manner possible. So what is Forex? What are the most basic concepts around Forex? I've actually done a diagram for you guys so that you can understand it, best. Yeah. So what is Forex? Forex is the biggest global financial market where buyers and sellers meet and actually trade. They are buyers, they are sellers, so they exchange. And they exchange over 5 to 7 trillion every day. Except in weekends, we're talking from Monday to Friday, they exchange. So how Forex traders actually benefit from Forex is actually figuring out, are there more buyers than sellers, and then we're going to jump into buyers, and we will be out there buying the currency, the pair, will be buying the commodity, will be buying the indices, and so many much more that are trading in Forex. So Forex is a short form, but the full name is foreign exchange. So the most traded in Forex are currencies such as, you can see right here, I already have one. This is the euro stroke the Australian dollar. So it means it's the euro, which the currency used in Europe, and the Australian dollar, which is actually the chief currency that is used in Australia. So they are paired together. So if we are buying the euro, it means that we'll be buying the euro and selling the dollar, the Australian dollar. And if we are buying the Australian dollar, it means we'll be selling the euro. The concept that I've actually preempted to you guys is in this chart, and I want you to understand this maybe before now we jump into the real markets. So I've actually used just but a mere example of something that most of you would understand best. So we're having land here. Yeah, everyone knows land, and I'll be using 1 acre of land here. So this is my base. So this is my base down here, and in my vertical, I have some monetary value of the same land. So if the land is appreciating in price, it means that the same 1 acre of land will actually will have pushed from 1,000, passed through 2,000 to $3,000, and then came back to $2,000, as you can see, then shoots up and breaks these resistant 3,000, the former where the land, the prices were rejected before, and actually will break it to 4,000, and it will actually come to the previously resisted area, and actually the market will just do that. So most people out there expect something like this, like market from 1,000 to 5,000 in a span of, without any other down movement. This is what most people, and this is what their psychology actually tells them, but this is not in the real world. Actually, it's really rare to get this out there. So what we actually have, yes, market is generally in an uptrend, but the market usually has retracement. The market goes up and down, but generally it's on an uptrend. So this is what we call an uptrend movement, guys. As you can see, the same 1 acre of land was from $1,000 to up to $5,000 and more. So there's an uptrend. Now we'll come into a sideways trend. So a sideways trend or a consolidation trend is where the market can actually go above a specific price and can actually not go below a specific price. So the same 1 acre of land, let's say it was from $1,000, shot up through 2,000, 3,000, got to 4,000, and actually was rejected at the same 4,000 before it came down and actually couldn't go also below 2,000. So, and then the market is just playing in between 4,000 and 2,000, 4,000 and 2,000. So the market has no general direction trend. Therefore, we can actually put a trend to it. This is what we call a sideways trend because it has no general direction of an up or down. So at this point, this is where we usually say that buyers and sellers are equal to each other. So it means that we got buyers who push the market. No, let's say the acre of land was pushed to $4,000 and actually came back to $2,000, and then we got buyers who pushed the market back to 4,000, sellers back to 2,000, and we're just generally buyers and sellers are equal. But in this situation, it means that there were more buyers than sellers, so we actually got to buy the market around here, and actually sellers came in and just actually put a slight movement over the same. Then before we got buyers again, then sellers, buyers, but generally we're already going up. So shorting or selling the market actually means that there is loss of value of the base. This is our base. In this example, this is our base. So this is the base, this is the quote or the second. So the 1 acre of land means that it's losing value. It means that if it was at 5,000, more than $5,000, we're actually losing value, and not so much of the number of acres, or we're actually going to half or quarter of an acre. It's the same 1 acre of land but losing value. So it means that if it was at $5,000, sellers came and took the market, took the acre of land to $4,000, and then retested back our 5,000 and actually short down to $3,000, and then buyers tried to take the market to 4,000, and actually sellers won and took the acre of land down and further down and further down, whichever. If it's a pandemic that made this acre of land go down, but it means that there were more sellers, there were more people selling the same acre of land, and now the demand that was out there was much more than the supply that was needed where people wanted to buy land. So that's why the same 1 acre of land is actually losing value. There are only two possibilities. Let me repeat them again. If the acre of land is losing value, or the dollars that we can see here that are paired with the acre of land are actually gaining value far much more than the acre of land. Yeah, so either this is losing value or this is actually gaining faster value. Actually, it's appreciating faster than the 1 acre of land. Those are the only two possibilities that the market will be actually going down. So I've used so many other terminologies like support and resistance, and supply and demand. I'll be explaining them maybe in a different video, but these are the most basic. This is the most basic concept around forex. You have to, number one, appreciate that the market is either in an uptrend, in a sideways trend, or in a downtrend, and you have to understand price according to the charting. Yeah, so let's move into the real market. I already introduced you guys. We're in the euro stroke the Australian dollar. So the euro is our base currency, the Australian dollar is our second currency. So I'll be showing you guys the three movements, and we'll start with an uptrend. So as you guys can see right here, let me mark this up. From here to here, so my gray area, let me reduce this a little bit. So this area, this is what we call an uptrend. As you can see, it's relatable to what we're having here, and you guys can actually appreciate this is not one straight line. Sorry about that, guys. So you guys can appreciate that this is not one straight line going to the upside. Let me remove this. Let me use a line graph for easy understanding. So you guys can see that this market was literally moving to the upside, but it was not in one straight line. Yeah, but this is still in an uptrend. So it means these are the prices. So it means that 1 euro is equals to some specific dollars that are to my right. Here you guys, you can see there is some 1.52, 1.54, 1.56, 58, 1.6, 1.62, 64, 66, 68, and 4, and so on and so forth. So it means that around down here, let me mark this up, around down here, market 1 euro, the base 1 euro equaled to 1.53643 of an Australian dollar. So 1 euro was equals to 1.53643 Australian dollars. But the more the market moved up, we can actually see that the market shot up and up and up and up to this level. So it means that the same 1 euro, the base does not change, actually equal to 1.61697. And actually, after the market got to this level, the sellers took over a little bit, not too much, just a little bit, and the market got to this level. Yeah, so the market got to 1.59371. So 1 euro was equals to 1.59371 of an Australian dollar before the market actually shot up again. So the market was rejected at these prices by the sellers. The sellers took over a little bit before the buyers actually took the market again. And then we had like a little glitch or a little consolidation in the market before the market pushed up again. So it means generally the buyers had it. You know, the sellers were trying to push the market right here, and also right here, and also right here, but we can actually see the buyers were taking over. We having massive buyers than we had more buyers than sellers, and that's why we call this an uptrend. I'll be teaching you guys how to look at candlesticks in maybe subsequent videos, but I just wanted to show you guys what's a trend and how to identify a trend in the best possible manner. So let me teach you guys now about a downtrend before we enter into a consolidation or a sideways trend. So this is what we call a downtrend. So if this is the genesis of the downtrend, it means that it does not change. It's still the same 1 euro up there. So 1 euro equal to 1.53012, but the sellers took over and actually the market was going down and down and down and down and down. And we can actually see that this market shot down to these areas down here, and 1 euro equaled to 1.45811 Australian dollar. And then the buyers tried pushing the market a little high, so the market actually came to this level up here. So 1 euro equaled to 1.47. So you guys can see the margin gap of where the buyers took over. The buyers took it from 1.45 to 1.47 before the sellers came in again and actually sold the market from 1.47 to 1.44. So we had this downward movement right here before buyers started fighting again. So the buyers took the market back to around 1.46702 before the sellers now took it again down, further down to 1.42. So this is a downtrend, and we can appreciate that it's not one big straight line that the market shot down, but we can actually see that there were buyers and sellers, but there were more sellers than buyers in the market, and that's why we appreciate that this is our downtrend. So let's move into a sideways trend. I'm trying, let me find a very good sideways trend. I actually have one here. So to an experienced trader, can actually see something else different, not so much of a sideways trend here, but it will do for now. So what we had here, that the market came from a downtrend, and actually the sellers were taking big shots. Actually, they were the big boys in the market, and so the market was going down, the buyers trying to push the market up, the market's going down, until the market started going up and up, then down and up, and the market actually didn't have so much of a general direction. So this is maybe not the best example. So let me find something small and actually really good, something small and good. So we had our consolidation trend right here, or our sideway trend. So we generally didn't have any market movement at this area. So it means that there were sellers and buyers and sellers and buyers and sellers and buyers. We can really say that this market is either going up or down. Yeah, that that's the same thing we can see right here. So the market was bouncing between two prices. The market was bouncing between these prices around here and these prices down here before buyers took over. Yeah, this was before buyers took over. The market actually, the buyers equaled to the sellers. They were just equal before the buyers took over and the market actually shot up. So in a consolidation is where we try to avoid, because we really don't know the direction of the market. We don't know if the buyer is going to take overs or the seller is going to take, they are going to take over, and we avoid it as much as possible. So those are the most basic concept, and I've actually even done live examples of the same. And hit the like button, hit the subscribe button, share the video, comment down there, and let's learn forex. Let me teach you guys. I'll be teaching you guys for free. I'll be also dropping my Telegram channel down in the description below. It's a free Telegram group where we share ideas, where we teach forex, where I give signals over to those who are intermediate or even advanced traders. And hey, let's learn forex. You guys be blessed and stay blessed.